Hello, Begoña del Rio and I, Irene Lostau, will talk about the cryptocurrencies and how their taxation system would work in Spain. So first of all, what are cryptocurrencies? Some people say it's the future, others say it's just one of the biggest scams, and others believe it's a way of dealing with black money. But what is it exactly? It is definitely not like everyday paper money that we're used to. A cryptocurrency is defined as a digital asset that are used as a medium of exchange. Its main characteristics is the use of blockchain, which is the most secure way of doing a transaction, together with a decentralized system. This means that, unlike the stock market, they are independent of any government or bank control, so basically the system relies on itself, and that is the beauty of this procedure. Therefore, each country has their own approach to this new system, and some even impose restrictive regulations to avoid the use of cryptocurrencies, while some ban all activity involving cryptocurrencies, such as Morocco, Algeria, Bolivia, and some others. This is due to the fact that they create an opportunity for illegal activity and terrorism, as it is unregulated. For instance, Australia, Canada, and the Isle of Man recently enacted laws to bring cryptocurrency transactions and institutions that facilitate them under the ambit of money laundering and counter-terrorist financing laws. Another challenge is how to categorize the cryptocurrencies and the specific activities involving them for the purpose of taxation, whether it is an asset, a currency, property, etc. For instance, in a 2015 decision of the European Court of Justice, it was decided that gains in cryptocurrency investments are not subject to value-added tax in the European Union member states, therefore exempting them from one type of taxation. But don't get nervous with this subject. This doesn't mean that the cryptocurrency system has no future. There are some countries, actually a bunch of them, that have existing regulations, or at least that are in process of devising taxation rules. For example, the mining of cryptocurrencies is usually exempt from taxation, but some countries have started regulating this activity, as Russia, where mining that exceeds a certain energy consumption threshold is taxable. In a number of jurisdictions, cryptocurrencies are accepted as a means of payment, such as in the Swiss cantons of Zug and a municipality within Ticino. The Isle of Man and Mexico also permit the use of cryptocurrencies as a means of payment along with their national currency. The European Union considers cryptocurrencies a method of payment, and their use as a payment is legal in Spain since 2015. Much like governments around the world that fund various projects by selling government bonds, the government of Antigua and Barbuda allows the funding of projects and charities through government-supported ICOs. But what about Spain? In 2018, the National Securities Commission stated that cryptocurrencies are not issued, registered, authorized, or verified by any regulatory agency in the country. This means that there are no guarantees and alerts investors of the risk of loss and fraud. Nonetheless, the government is considering the adoption of legislation and thus tax regulation. But what are the tax regulations we have at the moment for cryptocurrencies? The ones we have are the personal income tax, wealth tax, and tax on business activities. The personal income tax is applied where there is an exchange of cryptocurrencies to another cryptocurrency or fiat money, if there is profit. Therefore, this tax will not be applied if there is no movement, although they may increase in value. We also apply the wealth tax. The cryptocurrencies must be valued at their value in fiat money at the 31st of December and sum that value to the rest of assets owned by the individual. In case of a loss, the value will correspond to the difference between the profits obtained by inverting in another type of market, like the stock market, and the losses in the cryptocurrency market. Mining is considered an economic activity, coming with the corresponding legislation and obligations as well as the social security. They have to pay the tax on business activities. For miners, they do not have to pay value-added tax because there is no definite client determined. Value-added tax is not applied if you sell or buy cryptocurrencies. If you receive it as a gift or inherit them, the individual will have to declare in the gift and inheritance tax. So what are the tax implications and how would it be applied? We should determine the different natures of cryptocurrencies. They are a method of payment, thus a currency, as well as a source of income and an asset. We will distinguish three types of taxable events. First, the trading of cryptocurrencies to fiat money or to other cryptocurrencies. Here we could apply the transfer tax, as these are transfers that are not taxed by VAT, apart from applying the personal income tax and the tax on business activities in the case of minors. Secondly, we have the use of cryptocurrencies for buying goods and services. In that case, the individual have to pay the VAT that is already included in the price of the good or service purchased. Finally, we have earning cryptocurrencies as an income. And again, we'll have to pay the personal income tax that is already installed by the Spanish government. What we really need to keep in mind is that the most important part to take into account is the need for a clear regulation specific to cryptocurrencies, so there are no tax evasion cases. However, the government should avoid placing too many taxes on the cryptocurrency market, as the main advantage they present is the decentralization and the freedom to enter that market, and by placing too many taxes, it would restrict the entry and therefore decreases advantages.